Welcome to Talk Tickers. We cut through the noise of earnings calls to give you the investor's edge. Today, we're diving deep into the latest earnings report from Sea Limited. That's the parent company behind Shopee, Money, and Garena.
And the headline really is, a very strong quarter across the board.
Yeah, definitely. Let's unpack what that means. What did you see?
Well, Q1 2025 shows some serious momentum, significant jumps in revenue, and maybe more importantly, a big improvement in profitability.
Okay, let's hit those top line numbers then. GAAP revenue was, $4.8 billion?
That's right, $4.8 billion. And that's up 30% year over year. Solid growth.
But the EBITDA number, that really jumped out at me. Adjusted EBITDA hit $947 million.
Huge difference from last year. I mean, it was only $41 million in Q1 2024.
Exactly. And that flowed down to the bottom line, too. A net income of $411 million.
Yeah, compared to a $23 million loss a year ago. So quite the turnaround.
And crucially, this wasn't just one part of the business carrying the load. It was, Shopee, Money, and Garena all contributing.
Right. All three legs of the stool showed growth and better profitability. Should we start with Shopee? E-commerce.
Yeah, let's do Shopee first. Record highs, they said.
Record highs for both GMV, that's gross merchandise volume, and the actual number of orders.
Okay, so what were the specifics? GMV.
GMV hit $28.6 billion. That's a 22% increase year over year.
22%. And orders?
3.1 billion orders processed. Billion with a B, up 20% from last year. Just staggering volume.
Staggering is right. But like you said, the profitability story here is key. Adjusted EBITDA for Shopee was $264 million.
Correct. And remember, that compares to a loss of $22 million in the same quarter last year. So a massive swing into the positive.
What drove that? What were the main factors?
Well, a few things. Seasonality helped Ramadan fill entirely in Q1 this year, which always gives e-commerce a boost in Southeast Asia.
Okay, makes sense.
Then there's the take rate, basically the cut Shopee takes. That increased, especially from advertising. Ad revenue was up over 50%.
Wow, 50% on ad revenue. Sellers are clearly spending more.
Seems like it. Plus, they really focused on costs. Shipping costs per order were down.
Right, I saw that. Down 6% in Asia and quite a bit more in Brazil.
Yeah, 21% down in Brazil. Pretty significant savings. And they trimmed sales and marketing spend efficiently too.
And you mentioned tech earlier. They're using AI, right, for things like customer service.
Exactly. AI and customer service, even helping manage product listings. Those kinds of operational efficiencies, they really add up.
And it seems to be working on the user side, too. Average monthly active buyers grew over 15%.
Yeah, more buyers. And they're getting their stuff cheaper and faster, it seems.
Yeah.
Logistics cost per order down, delivery times improving, network expanding. It's a good combination.
Anything else stand out in Shopee? What about that VIP program?
Oh, yeah, the Shopee VIP thing in Indonesia. It's early days, but they said members are buying a lot more often and spending more. Good sign for loyalty.
And sellers seem more engaged, too, using more ads.
Yep, more sellers using ad products, and they're spending more on average when they do.
And what about how people are finding stuff? Live streaming and videos.
Content-driven orders. So live streams, short videos apparently make up about a fifth, like 20%, of physical goods orders in Southeast Asia now.
That's significant. And that YouTube partnership.
Seems to be gaining traction. They've expanded it across Southeast Asia now, embedding product links directly in YouTube videos.
Yeah.
Driving orders.
Okay. And quickly on Brazil, still looking strong?
Yeah. Continues to grow its user base. And it's actually EBITDA positive now.
How are they managing that?
Seems to be a mix of competitive pricing, much better logistics. They mentioned cutting delivery times by 2 or 3 days in some places and just expanding, into new areas and higher value categories.
And they still feel good about that longer term GMV growth target.
Seems so.
Yeah.
Confident in hitting that 20% 4-year target while still improving profitability.
Okay. Let's shift gears then. Money, the digital financial services part.
Also a very strong quarter for Money. Revenue and adjusted EBITDA both grew over 50% year over year.
50% growth there, too. And the loan book, that number seemed huge.
It is. It grew over 75% year over year, now sitting at $5.8 billion.
Wow. Where's that growth coming from? New users?
A lot of it, yeah. They added over 4 million first-time borrowers just in Q1.
4 million new borrowers in one quarter. So total active loan users must be pretty high now.
Over 28 million active users for their consumer and SME loans. That itself is up over 50% year over year.
And critically for lending, how's the loan quality holding up with that rapid growth?
Seems pretty stable, actually.
Yeah.
The 90-day non-performing loan, or NPL, ratio is around 1.1%, relatively low and stable.
Okay, that's encouraging. Is the growth concentrated anywhere specific?
It's pretty broad, but they highlighted Thailand's loan book crossing the $1 billion mark. And Brazil's growing strongly, too. They're also sort of moving up market a bit, maybe, offering credit products with lower interest rates, higher limits, longer terms.
Trying to attract higher income users, perhaps?
That seems to be the idea.
Yeah.
And it's not just lending on Shopee anymore, right?
Yep. Right. That S-Pay Later service is seeing more use off Shopee, particularly in Malaysia and Indonesia.
Leveraging the Shopee Pay merchant network, I assume. And they mentioned that standalone Shopee Pay financial services app has over 30 million downloads now.
So Money seems confident about the full year, too.
Yeah, confident in hitting guidance, but they stress they're keeping a very close eye on risk management, which you'd want to hear with that kind of growth.
And funding that growth, are they looking beyond just their own cash?
Definitely. They mentioned diversifying funding sources as priority. So looking at partnerships with banks, other financial institutions, maybe structured products, reducing reliance on internal capital.
Okay, good to know. Right. Third leg of the stool, Garena, digital entertainment. Sounds like they had a bit of a resurgence.
A big resurgence. Their best quarter since 2021, they said.
Really? What drove that?
Total bookings jumped 51% year over year, and adjusted EBITDA was up 57% to $458 million.
57% growth in EBITDA. Wow. Mostly Free Fire, I assume.
Overwhelmingly Free Fire. And specifically, that collaboration they did with Naruto Shippuden.
Ah, yes, the Naruto event. That was huge.
Apparently, yeah. Record player engagement brought back a lot of lapsed users. They said average daily active users, the DOU, was close to its pandemic peak.
Close to pandemic levels. That's incredible for a game that's been around a while.
It really is, and it shows the power of these big IP tie-ins. But it's not just that.
What else?
Their focus on hyper-local content seems to be paying off, too. Things like special Ramadan events in the game for Indonesia, offline events in Taiwan. Stuff like that keeps local players engaged.
And are they expanding beyond Free Fire? Any new games?
Yep. They launched Delta Force Mobile recently, and they've opened pre-registration for another title called Free City. So trying to build out the portfolio.
So Garena's feeling pretty good about 2025 then.
Very optimistic. They're guiding for double-digit growth for both the user base and bookings this year.
Okay, so stepping back and looking at the whole picture for Sea Limited, I mean, it's hard to argue with these Q1 results. Strong across the board.
Definitely. Shopee seems to be finding that balance between growth and, actually making money. Improving profitability is key there.
Right. And Money's growth in lending is just, explosive. Expanding beyond Shopee is a big opportunity, too.
Huge potential in digital finance there. And Garena, it's back. That rebound shows the gaming division still has a lot of punch, especially with smart content strategies.
Management seems focused on the right things too, yeah. Cost control, smart user acquisition.
And exploring those diverse funding options for money, which is important for long-term sustainability.
They did mention potential headwinds like currency fluctuations.
And competition.
Yeah, they acknowledged Forex risk, but felt their local market focus helps mitigate it. And competition, especially in e-commerce, is always there. TikTok Shop just launched in Brazil, for instance. Something to watch. Okay, so let's pivot slightly. Time for our This Is Not Financial Advice segment. Got an outrageous but plausible trade idea based on all this.
Okay, again, not financial advice, just a thought experiment. Given Money's really rapid loan book growth, adding millions of new borrowers, and expanding into, potentially more complex credit products, consider this. What about a long position in a well-established traditional credit scoring agency that has a significant presence in Southeast Asia?
Interesting. So not Sea Limited itself, but a related play.
Exactly. The idea is as Money grows its lending, especially if it partners more with traditional finance, the need for robust, independent credit assessment in those markets just goes up, right? More lending, more formalization of credit, potentially more demand for these scoring services.
So you're playing the broader trend that Money's growth is accelerating in Southeast Asia.
Sort of piggybacking on that ecosystem's expansion, yeah. It's indirect, definitely outrageous, but you can see the plausibility, capitalizing on the infrastructure needed to support that kind of fintech growth.
Got it. An interesting angle. Okay, wrapping things up, Sea Limited's Q1 clearly firing on, maybe not all cylinders, but most of them, and firing strongly.
Yeah, strong growth improving profitability, ambitious plans with VIT programs, content integration, expanding financial services. It's a compelling narrative.
Of course, challenges remain. Competition, macro uncertainty, the usual suspects. But it's undeniably a strong start to 2025 for them.
Absolutely. Lots for investors to dig into.
So as always, we encourage you to do your own thorough research. Think about what these results mean for your own perspective, what stood out most to you from Sea Limited's quarter. Let us know your thoughts.